All right. Welcome back, everyone. My name is Pratesh here with Kaizen Crypto, bringing you guys another video. So I hope you guys are all doing well and that you're having a great day. Today is February 5th of 2020. So today, guys, I wanted to bring you some information regarding some of my thoughts talking about my top 5 DeFi platforms. So a video that I made just a while back now, maybe like a week or so ago, talking about my Cardano exit strategy. That got a lot of engagement. Lots of people enjoyed that content. So I wanted to bring you guys something similar to kind of piggyback off of my ideas in that video. So if you guys do find some value from this video here today, please be sure to drop a like for me. It lets me know that you enjoyed it. And if you guys are new to the channel, go ahead and hit that subscribe button. I post cryptocurrency content like this as often as I can, keeping you guys informed and up to date, talking about investing, finance, technical analysis, all of that here on this channel. So you guys definitely want to stay tuned. So what I have for you guys here in this video today, we're taking a look at my top 5 DeFi platforms. As far as my strategy for being able to, take some profits off the table with cryptocurrencies, I'm not the type of person that's going to want to go out and buy a Lamborghini as soon as Bitcoin hits 100 grand. If that's you, you're more than welcome to do what it is that you'd like to do with your money. I do want to preface this also that this is not financial advice. This is just my opinion. I'm letting you know what I would do. So with that being said, there are lots of options to us available now. Since the space as a whole is maturing, lots of developments happening with multiple platforms. So I wanted to give you guys some of my thoughts on my top picks. So first on the list here, and guys, these are in no particular order. These are just listed. First, I have Kyber Network. So Kyber Network is a platform that I've been using for a while. And the premise of that platform is that you can swap ERC20 tokens. Why this would be beneficial to you is, let's say that you're an investor in Ethereum, okay? And Ethereum moonshots, and you have whatever you have as far as your investments, your holdings, whether you're staking or not. Once ETH 2.0 comes out, let's say you want to take a little bit off the table. So what you can do with Kyber Network is you can take your Ethereum tokens or your basic attention tokens or your Chainlink or whatever you're holding that just so happens to be ERC20, and you can swap that for DAI stablecoins. So it's a great way to be able to lock in profits if you are invested in a Ethereum token. Next, I have Oasis. So Oasis is actually a newer platform. MakerDAO had something called a CDP portal, and that's what the platform was essentially before it transitioned over to Oasis. Now, the premise of the platform is more or less the same. You're able to trade cryptocurrencies. You can borrow DAI and you can save DAI. Now, Oasis is pretty cool. I've actually been using the platform for a while. What you can do is you can lock in your Ethereum and you can borrow against your own collateral. So you become your own bank at that point. Now, it's really nice because you're actually able to earn interest if you decide to save DAI. Now, you are going to be paying interest in the case that you decide to borrow, but it works both ways. So if you have DAI locked up and if you're saving DAI, you're earning interest on that capital. Now, guys, third one on the list is Nexo. No, I know Nexo is not necessarily a decentralized financial product, but it still made the list because it is something that I've been using for a while, and I feel like it's definitely gained credibility, and it's something that I wanted to talk about. Nexo is basically crypto-backed loans. So let's say if you're in a position where you don't want to sell your crypto, but you're in need for capital. Well, what you can do is you can borrow against your crypto. And this allows you to, pay for day-to-day expenses. You can decide to invest that money in your business. You can do whatever it is that you need to do without having to sell your Bitcoin. Now, they have multiple different options for crypto that they accept on the platform. I know Bitcoin, Litecoin, Ethereum, they can accept stable coins. So there's lots of options with Nexo. And the nice thing is, I know it is a custodial service. So guys, as far as how comfortable you feel doing something like that, it's It's up to you. I encourage all of you to do your own research with all these platforms. This is just my list. If you guys have your favorite network or your favorite platform, be sure to let me know down in the comment section below. I would love to hear from you guys. But getting back to Nexo, what they do is they actually have insurance for custody, which is really nice, considering that you are trusting a third party to hold your funds. If you're not comfortable with that, I get it, right? Not your Bitcoin, or not your keys, not your Bitcoin. Like, I totally get that, but I'm just giving you guys my thoughts on that. Next is Compound. So Compound it's actually a very popular platform. I've seen it definitely gaining a lot of traction. Essentially, you're able to borrow and earn interest on your cryptocurrency. One thing with Compound I've found is that the interest rates definitely vary just depending on what cryptocurrencies you're going to be borrowing against or loaning out or earning interest on. So yeah, you guys will definitely have to look into all these platforms. Definitely do your own research. If you guys would like me to post a video talking about the user interfaces for all these, let me know down in the comment section below. I'm here to help you guys grow, and we're in this journey together. And the last one I have for you guys here is Constant. So Constant is actually something that I found just incredibly fascinating. So it's peer-to-peer lending and borrowing. So let's say if Alice has $1,000 and she wants to earn interest on that $1,000, and Bob is starting a business and he needs to borrow that capital. Well, Alice and Bob can cut out the middleman and go directly peer to peer. And that's something that's really cool. I think that really captures the idea of the DeFi movement. So guys, those are my top 5 DeFi platforms. And tying into that, I wanted to give you guys some of my thoughts on my thought process when it comes time to take profits. So many people are concerned about knowing when would be an appropriate time to sell. How is it that you're going to know exactly when it is to take profits off the table? And guys, I can tell you, the best traders in the world, unless you're like staring at a computer all day, every day, you're probably not going to time the top, and you're probably not going to time the bottom. That is just something that you'll have to come to accept. Now, there are certain tools that we can use to help us make the best educated guesses possible when it comes time to take profits or go long or what have you. And I want to share with you some of those tools as well. But more on the thought process of it. Guys, it's a matter of having a plan and sticking to it. Once you have made that decision, don't feel that you need to buy back in because the price is continuing to go up. You should already have a plan mapped out, and you got to stick with it. Now, as far as the types of decisions that there are to make when it comes time to do this, there are emotional decisions and logical decisions. So an emotional decision, let's say you're at the grocery store, you're in the checkout lane, and you see a magazine with your favorite celebrity, and you start picking up that magazine, you're reading it, you're interested in the gossip, and you buy that magazine. $5, just gone. Or let's say an even bigger ticket item, right? Let's say you're at a car dealership and you see your dream car, right? Or it doesn't even have to be your dream car. It could just be a really nice ride. You want to impress that girl at that restaurant that you were at last night, and you're itching to go for a test drive. And after that test drive, the salesman reels you in, and that's it. You're stuck with a expensive car note, right? So those are emotional decisions. Those are decisions that we don't necessarily think over. They're more of in the moment, on the fly type of decisions. And that's what we want to avoid here as cryptocurrency investors. You guys know that this space is not for the faint of heart. It will test you and it will break you if you are not prepared for it. Now, logical decisions are decisions that we spend time to contemplate over, and we weigh out all the different options here. I've got a little graphic down at the bottom of this page talking about risk to reward trade-offs. So these are logical decisions. They're often written down. They're often discussed with like-minded people. As far as making good decisions, it's always a great idea to bounce ideas off of people that you can trust and rely upon. And a big thing for me is I like to have things written down, because when I see things written down, I can look at it objectively and I can say, you know what, I think it might be better to do it like this, and I can always go back and change it. So just something to keep in mind. That's a quick little tip that I have for you guys. And last little bit that I have here, I wanted to give you guys some of my thoughts, taking a look at some tools that I will be using personally when it comes time to better understand when it is time to sell. So what I have for you guys here is the Bitcoin price chart. And guys, we're taking a look at this here on the weekly. I believe that from an investment standpoint, the longer term time frames are definitely going to work better in terms of getting an idea of when it is that we should be taking action here. My favorite indicator on the weekly time frame for the Bitcoin chart is going to be the weekly RSI. You can use the MACD, right? Let me just show you some of the differences here. You can see that the MACD is a lagging indicator, and what that means is that the movements in the indicator happen after the price makes its move. Whereas the RSI, it's more of an accurate indicator as to calling tops and bottoms. As you can see, when the price topped here at 20K, the weekly RSI was extremely overbought. We're talking about 88, 89, right? We can go all the way up to 90. So we're talking about topping out. So I think that I would prefer the weekly RSI as opposed to something like the MACD. As we can see here, we did have the decay here in the histogram with the MACD. We started to tick downwards, but we didn't get that MACD cross until well after those gains were closed out and we were back at close to around 11K. So I want to use something like the weekly RSI. And guys, I encourage you to try different things out, test what works best for you. I'm just giving you guys something that I like to look at. And we can see here, whenever we were this overbought on the weekly RSI, we were in for a correction, albeit it wasn't a severe correction until we did get this blow off top, which led into the 2018 bear market. But nonetheless, whenever this weekly RSI topped out, we were in for a small correction. And that's exactly what we saw throughout the entire previous bull market. And going back here, even into 2019, we could see when we were up here at around 14K, huge wick right here. The bears were definitely in a mode of taking profits at this level. And we can see here the weekly RSI topped out at previous resistance. So something to keep in mind, that's definitely something that I'm looking at when it comes time to take some action with the Bitcoin price. Another thing that I also like to look at here, this is going to be a chart on the website lookintobitcoin.com. I'm going to link to this website in the description down below. Lots of information here on this website. You guys can see a variety of different data science models. I know DataDash does a great job of explaining this website, and I've taken the time to learn a little bit about it myself. This is probably one of my favorite data science models because it makes it very easy to understand what it is that you're doing here. So as you guys can see, when the price crosses below this 2-year moving average, this green shaded area, potentially a good spot to start accumulating. And vice versa, right here, when we cross this 2-year moving average times 5, this is a 5-year multiple, the 5x multiple of the 2-year moving average. You can see the price crossed over and it's a red shaded area. So that would have been appropriate time to start taking some profits. And whether or not this plays out again in the future, I'm not entirely sure, but we can see that it's been pretty accurate so far. If you were able to average in positions here right around when Bitcoin was around $3,000-$4,000, you're definitely doing pretty well on your money. And we can see most recently here, this is kind of a zoomed in. The price definitely didn't go too far below this 2-year moving average, but we can see that the green shaded area, if you were to have gone long in any of these spots, you are currently well up on your money right now. So I'm going to be using that as well as the other tools that I was talking to you about in this video to get a better understanding of when it would be an appropriate time to take some profits off the table. So guys, that is it for this video. I really do hope that you enjoyed it and that you find some value. Again, be sure to drop a like for me before you head out. And if you guys are new to the channel, go ahead and hit that subscribe button. I really do appreciate each and every one of you. Until the next video, take care.